Thank you so much for organizing this event. Thanks to you all for coming. That's really wonderful to see so many of you here, especially as this talk is based on a new book. It's just come out, 6th of January was publication date. These kind of books take a little while to get around, so it's really good to see you all here. And I can congratulate you on coming to a half-an-hour session on the book. That saves you from going through over 300 pages that have taken many years, I think 3 to 4 years to compile. The book is quite detailed in its historical coverage. This is the contents pages. And my co-author, Barry Buzan, who's an emeritus professor in the Department of International Relations, and we basically trace the emergence of the market in international politics all the way back to its origins. That's in the early 19th century. Actually, my co-author Barry Buzan smuggled in a chapter on pre-modern ideas about the market, so he goes back hundreds of years before the 19th century. But basically we trace the origins, the rise, and then the fluctuating fortunes of the market in international relations through the last 200 years. Why did we write the book? There are plenty of books on global capitalism and global economic history. The one thing that was missing in our view was an analysis, a careful study of how the market plays out in international relations, not in the global economy as a principle, as a system of economic exchange, but as a principle of governance in international relations. And so we're bringing together two literatures, and we are basing ourselves on what is known as the English School of International Relations. This is an approach that the LSE very much developed, and international political economy or international economics, where those matters are usually studied. So this is about bridging a gap in the literature, bringing two strands of study together, international relations and political economy, and that's what we hope we have achieved. We'll see how far we get in that bridging effort. If nobody walks on that bridge, then, well, we'll have to make another effort in that mold. Let me just take you through some of the key arguments of the book, but let's start with a few basic definitions, because you all have some idea of what the market is about, but we argue in this book that there are 3 different versions of the market that we need to distinguish. We use them all in the book, but I'll tell you more about what the key point is for us in this project. The first thing to say about the market is, of course, it's just something that you can observe, you can physically see it out there. You can go to Camden Town, there's a second-hand market. You can go to a medieval market in your history studies. You can go to the London Stock Exchange. These are physical markets, a marketplace in other words. That's not what we're really concerned with, although it's an interesting aspect to study. Then there's the market as in a structural feature of the economy. That's what economists study, right? It's the market system, which you can contrast with, say, a command and control economy. Again, we study that, but it's not what we are after. What we want to focus on is the market as a governance principle. And this is the idea that the market becomes a fundamental norm, not just of the economy, but of international relations as well. So this is what we focus on when we talk about the market in global international society. And I want you to keep that in mind, because it's important to keep those 3 versions apart. So what do we mean by the market as an institution, as a fundamental institution of international relations? So it's a governance principle. It's about how the relations between states are to be structured. The market is just one of many of these fundamental institutions or norms or principles. We use these words interchangeably, and it stands in some relationship with these other norms. So we conceptualize the market as an institution of international relations. These institutions, they have their own history. They come from somewhere. They don't just fall from heaven. They need to be created. They emerge. They are adopted. They are consolidated. But then they may also die. They may weaken. They get challenged. They're contested. And some of them are in a process of decay. And so what we want to do is put the market in a historical context in this book and try and understand where it came from, how it rose to such prominence, particularly in the 20th century, and where it's headed now. And the argument which you'll be familiar with, is that it is currently under threat and is in decline. So the question for the book was, how has the market fared over time? And of course, the theoretical question that's driving this inquiry is, what explains why the market has fluctuated so much in the last 200 years? So that's the starting position for us. Just a quick excursion into international relations theory. Just out of interest, how many of you are studying international relations? Okay, that's a good amount, but not everyone. Okay, so bear with me, those of you who are not studying international relations. When you hear IR scholars talk about international institutions, usually they talk about this, secondary institutions. Those are the institutions that are deliberately created by states. They're created to deal with transaction cost issues. They're created in order to deal with some collective action problem. So the United Nations is meant to provide security. The World Trade Organization is meant to ensure free and regulated trade among nations. And so we have a plethora of international institutions that have come about. Some of them are strong and meaningful, others are withering away, and they are making up that institutional framework of international diplomacy and governance. But the English school of international relations argues that beneath that level, there's a deeper level of institutional features. These are called primary institutions, or you could call them fundamental institutions. And these are not institutions that are created in a deliberate way. They don't get negotiated. They come about, they emerge, they evolve. They define the deep norms, the social structure of international relations. They make up what you might call the constitutional order of international relations. That's the layer of institutions that defines what it means to be a member of international society, a state, a legitimate member of international relations. They also define what it means to conduct international affairs in a legitimate way. Doesn't mean that these institutions are adhered to all the time, right? Sovereignty. Ukraine is currently fighting a bitter struggle over its sovereign control over its territory. International law, another such fundamental institution, which is often honored more in its breach than in its adherence. And so we argue that the market should be conceptualized in the same way as one such fundamental norm. And that's the point of departure in our work from what many other scholars have done in this field. But the key point is the two are in constant interaction. Many secondary institutions are based on primary institutions. They reflect the underlying norms, but they may also then be the points where change happens. Secondary institutions can change much more easily. They can be created, they can be destroyed. And so a lot of contention over the underlying fundamental norms happens at the level of secondary institutions. So when we see the current battle over the World Trade Organization, should it have an appellate body that adjudicates trade conflicts? The United States is currently saying it shouldn't. That's where fundamental norms such as the market get contested. And so the two are in constant interaction. Change happens at both levels. It happens more frequently at the level of secondary institutions. Primary institutions tend to be much more stable, long-term, more difficult to change, but they can still disappear. And so just to give you a very quick overview of where the market sits within the whole family of primary institutions, this is a table from our book which shows to you that we can think of the interplay between the market and other primary institutions in terms of high or low interplay. Ignore the low interplay for the moment, just focus on the top row at the moment, and the top layer. High interplay happens with a lot of the primary institutions. In many cases, take the first column, the interplay is complementary. So as the market rises, we see a growth in diplomacy, economic diplomacy. We see a growth in international law. The whole area of international commercial law, private law, is based around market exchange. But on the right-hand side, you see some of the more contradictory, conflictual relations. And as we argue in the book, the market is in deep conflict with some of the key institutions that make up the Westphalian international order. that is particularly territoriality, less so sovereignty. I can explain that later. But certainly war. In times of war, the market takes a backseat. During the First World War, during the Second World War, even the most ardent market-oriented liberal economies of the West dispensed with all market norms, moved into a full war economy. And then nationalism is fundamentally opposed to the idea of a free-flowing market at the global level. Nationalism is currently rising strongly, particularly in economic nationalist forms, and that is now one of the main counterpoints to the predominance of the market principle. So in the book, we trace this historically, and I can't do justice to 5 or 6 chapters and 200 years, but this is the one graph that perhaps gives you a sense of how the market norm has fared. And if you look back to the beginnings, right, so the market norm in economic theory arises in the late 18th century, Adam Smith, the physiocrats in France, but then it's only in the post-Napoleonic era that market principles enter global trade and investment relations. And we see the following pattern played out over the last 200 years. The market norm rises in the long 19th century. It's not fully adopted around the world, but Britain in particular as a hegemon drives it forward as a key norm of international relations. It then goes through 2 major setbacks, the 2 world wars when market relations are suspended. And the interwar years too is an era where rising protectionism, aggressive militarism, territorial expansion take over and push market norms to the back. We then, after 1945, see a period of a modest, careful renewal, but this is an era, the Bretton Woods system, which embeds the market norm in a wider political structure that keeps it under check. And it is then in the neoliberal era, from 1973 roughly onwards, that we see market liberalism come to the fore and dominate international relations, only to take the first setback, 2008, the global financial crisis, which leads to a retrenchment of the market in global finance. And now, with the rise of economic nationalism, we see something similar happening in the post-COVID era. And so if you look at this picture, 200 years of the market norm, we perhaps see what we describe as a pattern of a fundamental norm arising and flourishing in the 19th century, then collapsing and retreating in the first half of the 20th century, entering a period of perhaps compromise between political and economic dynamics during the Bretton Woods era, flourishing again in the era of neoliberalism with lots of countries, including former communist countries, China in 1979, the Soviet Union in 1991, adopting market principles. Many developing countries that had stuck to a more socialist industrial developmental model, adopting market norms, willingly and unwillingly, but it certainly feels in the 1980s and 90s as if the market reigns supreme, only to take a knocking again in the post-2008 era. And so unlike many other fundamental norms that have risen, take nationalism, take, for example, the rise of environmental stewardship, which I've written about in other contexts. They've all risen and they've stabilized and they've remained fairly firm in terms of their place in the international social structure. The market proves to be much more volatile, much more fluctuating. And that creates, from an international relations perspective, a unique puzzle, which is how do we explain that? Why is the market so volatile? That also then gets us into the conversation about where might it be headed, particularly now in the current context of international conflict and economic nationalist strife. So, the takeaway points, therefore, from an international relations perspective are: 1, the market has proved to be a particularly demanding primary institution. It doesn't easily slot into the international social structure of international relations. There is a lot of contestation between key norms like territoriality, war, international law less so, but certainly nationalism. The market, if it is applied fully, demands that we open territorial boundaries, reduce those barriers to trade, that we allow foreign companies to buy domestic assets, that we allow the movement of goods, services, and up to a point, people as well, workers. And that comes up against cultural, political, and nationalist sentiment that creates friction in terms of how the market fits in with other existing norms. We know from economic studies that the market is an inherently unstable norm. Right? It creates a great deal of inequality. It creates economic crises, financial crises that are difficult to manage. As such, it should be expected to be unstable. But it also comes up against the kind of political demands of stability that we seek to create. And so for it to work as a norm of international relations, it needs to be held in place by a firm political framework. That framework was created in the second half of the 20th century during the Bretton Woods era. So that was one way of managing the disruptive nature of the market principle. But that framework didn't last. It had its own inherent contradictions, and the Bretton Woods system broke down. And that does raise indeed the question of what kind of framework is needed. And so when we look at the history of the market norm and how it arose, we find that it's been created and held by a mixture of the three big social mechanisms that create norms in international relations. That's belief. Many Anglo-Saxon societies, Britain, America, Australia, have long adopted market principles out of belief. When China adopted the market principle in the 1980s, that was not out of belief. The Chinese Communist Party did it out of calculation, that it would serve a certain purpose. Many developing countries adopted market principles not out of belief, not out of calculation, but because of coercion, because they were dictated a certain economic reform package. And so it's a mixture of different mechanisms. And the question that's still unresolved is what kind of mixture creates a stable basis for the market to reign in international relations. And at the moment we are witnessing a certain great power dialectic playing out. The United States is in full retreat from global market norms and principles, is wanting to reassert national control over its foreign economic relations, in trade, in investment, in finance. But as China has also recognized, which is not very much on board with the United States in terms of challenging market norms, to be a great power today means you need the economic dynamic that is created by market economics. You can't quite do without the market. And so great powers go through this cycle of having to rekindle market spirits in order to create the basis for their own political, economic, and military power. But as soon as they allow market dynamics to run away in a global context, that comes up against their desire to control their territory, to control their power, and to retain power gaps, a power differential vis-à-vis other countries. And so the outlook for the market looks quite uncertain and mixed. We've seen a big fundamental shift towards great power conflict. Economic nationalism is on the rise. But great powers continue to experiment with a kind of a mixture of asserting more control over economic relations while allowing their own national champions to play a bigger role, an expanding role in the global economy. And that creates an uncertain dynamic that is currently playing out. The big question, I would argue, is whether we can ever come back to a kind of a Bretton Woods style Mark II version of finding accommodation between, on the one hand, the need for market economics to play itself out and the desire of most societies to retain some control over their economic fate, a kind of accommodation between the market principle and economic nationalism. And that, to me, is the biggest challenge we face in today's global political economy, and we haven't quite got to the answer yet. All right. I think I should stop here and see what questions there are. Thank you very much for listening.